I think we're ready to get started.
Let's kick it.
All right. We've got the record button kicking. Yes, we do. All right. Good morning. Good morning. Good morning. Good morning. I am Nikki, Director of Marketing at Skimmer. And thank you to all of you for taking time out of your day to talk cash flow. So a few housekeeping items. First, this is a recorded webinar. All attendees and registrants will receive an email with the recording, the slides, and some additional resources that we'll cover today during the presentation. In addition to that, we have the Q&A open. So at the bottom of your screen, there's a little Q&A section. We highly encourage you to ask questions, and we will get to those questions during the presentation, or try to get to as many as we can. You can also message the host using the chat and the panelists that you see here today. So without further ado, let's introduce our panelists. Flavia, we'll start with you.
Wonderful. Good morning, good afternoon. I am Flavia De La Fuente. I'm the Director of Operations at Skimmer. I have the joy and pleasure of managing our customer-facing teams, which includes our mighty customer support team, customer success, as well as our team of account managers. And I love talking to you all. I like to travel around the country and meet with folks and learn about your businesses and how we can help you achieve all your hopes and dreams. So I'm always around if you'd like to give me a shout, and I'm delighted to talk today about cash flow with you all.
Hi, everyone. My name is Erica Steinbrück, and I am our National Account Manager. I lead our account management team here at Skimmer, overseeing Skimmer Billing. So any questions you have there, I'll be your person. I have been working in the field service management software space for many years. I am personally really passionate about helping businesses succeed and thrive. So I'm really excited to share what we have with you today on cash flow.
Well, hi, everyone. I'm Eric Hirst, and I'm a professor of accounting at the University of Texas at Austin. I teach undergrads, MBAs, and executives all about the joys of financial reporting and financial analysis and how they can use those numbers to guide their businesses and to improve the results that they've gotten.
Yes, and I'll take a minute to say thank you, Eric, for joining us. Don't be fooled by his crisp white shirt. He's pretty punk rock, as I've learned in getting to know him over the last couple of weeks. So thank you, Eric, for joining us today from my alma mater, Hook'em Horns.
Okay.
All right, so yes, that was a good transition. So we will take a minute just to review Skimmer's mission. And look, we want to empower all of you with a platform to build great businesses, and not only the platform, but resources and information to help you grow your business, like our webinar today. We now serve almost 20,000 full pros nationally, mostly nationally. We have a few outliers, but people rely on us to get organized, streamline operations, and grow their businesses without sacrificing quality. And we really want to ensure that you can deliver quality for every pool or spa, every customer, and every employee who works for you. So with that, let's get into the agenda today and get going. So first, we'll kick things off with some definitions. What is cash flow? What is cash conversion? I am not an accountant. Probably many of you are not accountants or accounting experts, which is probably why you're here, and also why we have Professor Eric here. Thank you again. We will talk about why you should accelerate your cash flow. We'll talk about inventory and how much inventory to keep on hand. Then we'll get into the 3 rules of cash flow and share some actionable resources with you, and follow that up with a Q&A. So before we really begin, I just want to run a quick poll, get a quick temperature check. These are totally anonymous, by the way, so feel free to be brutally honest and don't be shy. And we will launch this poll and give you all a second to answer. So your cash flow questions: what percentage of your customers consistently pay on time? And how much time do you spend each month invoicing and collecting payments for service, repairs, that kind of thing?
Wow.
Give you a few more seconds to answer here. Thank you for your participation.
Yeah.
All right. I'm going to turn this over to Flavia. Flavia, do you want to review the responses and take it from here?
Yeah, I'm sharing the results. What percentage of your customers consistently pay on time? 21%, 13 of you, almost all of them. 62%, most of them. 13% some, and some of you, we can do better. I hear that. I always just want to do better off of a baseline. Second, how much time do you spend each month invoicing and collecting payments for service and work orders? Fewer than 5 hours. That's outstanding. 5 to 10, 10 to 20, 20 or more. This is really interesting. All right. Okay, so we'll put a pin in that. We'll talk about that later. I'm going to just close it here or minimize. All right. So what is cash flow? What is cash conversion? You know, everybody's heard this phrase, cash is king. What does that really mean? Well, a few accounting basics. Cash flow comes from operating, financing, and investment activities. And we didn't mention this, but Eric is actually my accounting professor. So I'm going to say this, and he's going to tell me whether I get a A, B, or C. But there are 3 financial statements. There's the income statement, there's your balance sheet, and there's your cash flow statement. And your cash flow statement has 3 parts: operating, financing, and investment activities. We're going to focus on operating cash flow today. Financing would be a loan. Investment activities might be, you know, money that you're investing in Bitcoin. We're going to put all of that aside and just focus on operating cash flow today. The cash you're receiving from your customers, less the cash you're paying to suppliers. Eric, how'd I do?
I think you did tremendously. And
Thank you.
I'll put a pin in something that we might come back to later is ask yourself where you're going to come up with the money for that new truck you need. Right?
That's right.
Which would be one of our investing activities. So beyond Bitcoin, when we want
That's
to grow our
right.
business, we're asking
how
do I get that money?
So that's the fundamental. What is it? We want to cover, of course, the why. Should you accelerate your cash flow? And these are the fundamental reasons. You know, Eric, our Professor Hirst, has spent many years working with many businesses. This is a fundamental topic. Pool and spa services is no exception, but we've put together here a few reasons, and I'll let Eric speak to the first one.
Well, you know, things are going well. So, right, you're running your business that's going well. You want to grow. You want to go take it to that next level. The question is, how do you pay for that? Because you know that you can't do that without hiring more techs, without having more vehicles, without having the inventory you need to run your business. So there's a big need, right, for cash up front to fund that. So that that's my starting point, right? Is as soon as you become successful, a lot of businesses, the first challenge they have with their success is how do I pay for that success?
Right? And there's so many customers, there's so many folks who have met, so many pool and spa professionals who are in this great position of being able to pick their customers. Right? There's a lot of demand for pool and spa and spool services lately. And sometimes that ability to service all of these customers is gated because of labor, frankly, very topical these days, or because of things like of having to fund trucks. So, you know, the principal reason to fund your growth. The other is, and we're going to talk about the metric to measure cash flow conversion, but it's a measurement of your operating efficiency. And there are, first of all, this is something for you to analyze your business, a framework through which to look for tweaks and enhancements to make. But there's a lot of people who are interested in one day potentially selling their route, potentially selling their pool and spa service business, potentially to a acquirer, or they're interested in getting a loan from a bank. Lenders and acquirers, when evaluating a business, will look at cash flow conversion and your ability to turn inventory into dollars and the speed and efficiency with which you can do that. So this is an additional reason why that might matter.
You know,
And
we
the
might add
last
to that.
one, go ahead.
Flavia is not just selling your business, but buying somebody else's business that
That's
you want
true.
to add to yours, right? These are tools that for you to evaluate how that other business is doing, and for you to ask yourself, hey, can I improve on that business? How much would I pay for it? And can I improve it?
That is a great point. We do have plenty of folks who are acquiring routes to grow their business. They're acquiring entire other pool and spa service companies to grow their business. That's a great point. And this is a lens through which to evaluate their ability and whether it's something you want to take on if you can make a few tweaks to their operations. That's absolutely right. And the last one, this goes without saying, but we're going to say it anyways because we think it's important. And I've met a lot of you who, some of you have soft hearts, and there's a large representation of pool owners who are retirees or in fixed incomes, and of course we've had similar situations where you extend grace to people, of course. Our professor extends grace to people when they're a little late for class as well. But there's a discussion here about healthy boundaries, right? You're building a business, you have people to support, and your teams depend on you as well. Some folks are just getting started, but there's folks who are managing teams of 25, 30 technicians, and it behooves you and them and everybody who depends on you to make sure that cash is coming through the door with expediency in order to meet the needs of your business. So I just want to say that.
Carlos in chat says, yes, I do that way too much. We hear you, Carlos.
You got it. Yeah, you got a soft heart. We get it. We totally get it. So let's dive into it. An accounting class. As we mentioned, acquirers and lenders care about this. So should you. Eric, would you please break down the cash conversion cycle?
Sure. Well, let's maybe think about this. Think about what a perfect world would be. In a perfect world, I would get paid by my customers for years in advance. They would just pay me and I would do the work for them. And my inventory would show up right when I need it. Not a day too soon and not a day too late. I wouldn't need a warehouse, right? It just shows up on the job site. And all that inventory I've bought, my suppliers don't hound me to pay me. So that's a perfect world. What the cash conversion cycle is getting at is the real world, which is saying, how many days do I hold inventory for? And then we can ask ourselves, what's a reasonable number of days? Add to that, how many days it takes before we get paid. So your days sales outstanding. So you've bought some inventory, you haven't generated any cash yet because you haven't put it into use. And then you put it to use, and how many days does it take before you get paid? And if you take those, that's how many days from the time you bought your inventory to the time you finally saw cash. And you can subtract from that how many days it took you to pay your suppliers. And it's quite common that suppliers have been paid prior to customers paying the vendor. And so that open window, the time that it takes for you to get paid between buying your inventory and selling it and getting paid, less the days that you've already paid your suppliers. Those are the days of sales that you need to finance. You've got money tied up. Either you have had to borrow for it or you can't use it for something else, but that's your cash conversion cycle. So you'd ideally like that to be a very small number.
Yeah, it's literally counting days. And
Yeah.
this is a way to identify improvements, a framework, right? To accelerate your time to cash, a measure of how well you're running the business, and lower is better, as we said. So let's get into breaking down a few of the components. We're going to focus on days inventory outstanding and days sales outstanding today. We're going to set aside days payables. So let's go right into inventory accounting, please, Eric.
All right. So to calculate it, the question you might want to ask yourself is, how long do I hold inventory before I sell it? And you might be, you could break all of this down into things like, how long do I hold chlorine for? How long do I hold, skimmer baskets for pools? How long do I hold filter parts for? And then ask yourself, how long do I need to hold that for? Now, to calculate that, you take the formula here, and you're going to receive these after, so you don't have to sort of run and jot them down. But you take the average inventory that you were holding during a period, and you divide that by the cost of goods sold. So how much inventory, how much chlorine am I holding? The dollar's worth. What was the cost of goods sold? What was the cost of the chlorine that I sold this period? Divide those two, and then multiply that by the number of days in that period. And that's going to give you a number. And it might be 30 days, or it might be 45 days, or it might be 3 days, right? And it's telling you on average, how long do I hold that particular type of inventory? And question I get a lot is, what's this average inventory thing? And really, it's very simple. We just take the amount we had at the beginning of whatever the period was, whether it was a month or a quarter or a year, take the beginning figure, take the ending figure, add them up, divide it by 2. So you don't have to get fancier than that.
Yeah, and if you want to evaluate it over a quarter, a year, a month, that's totally up to you. But this is a really tough one, particularly in recent years, for not just pool and spa, but lots of industries. Due to the pandemic and due to all of those supply chain issues, it's been a really difficult environment for everybody, and there's been shortages in a lot of product. So what's your response to somebody who's like, I don't know that I can control any of this?
Well, I mean, there are things that you can control, and it would be nice to know, right? I might have trouble buying this or that chemical that I really, really need. And so I need to hold a stock of it, because I can't run my business without that in stock every day. But you could still ask yourself, do I need 6 months worth of it? Right? Do I need 3 years worth of baskets? So for skimmers, right? So if you said, geez, I've got a warehouse and it's stocked to the ceiling with all these baskets, and I only move, 30 of them every month, but I've got 1,000 of them, you're probably holding more than you need.
Yeah, and you can break this down, not just inventory as a whole, but subsets of inventory, right? The conditions of chemicals might be significantly trickier than the conditions for skimmer baskets, right? Or other things that are being sold through the business. So it's a difficult environment, but in general, you should probably know your number. And if you can make enhancements on a sub inventory basis, that's an enhancement, and it's 1,000 cuts.
Yeah, that's important stuff, because at the end of the day, it's not really too hard to, once you start thinking about this, right? The more inventory I hold, the bigger space I need to rent or own to hold it.
Yeah.
The more inventory I hold, the more insurance I need. The more inventory I hold, the greater the chance that someone runs into it and damages it, right? So you'd kind of like to get that down without being stocked out when you need it.
Yeah, and I think hopefully this year is better than years past. And I think there's a hope that there's going to be more normal purchasing patterns going forward. Demand for, in this business in particular, is has maybe eased a little bit, but it's still above pre-pandemic levels of demand from what I can understand. So this is days inventory outstanding, and we're going to break this down a little more in a little bit. Because days inventory outstanding actually includes the time to invoice, but we'll break that down in just a second. Let's talk about days sales outstanding. Once you've actually invoiced, what does this time period represent, Eric?
Well, this is really saying, how long does it take before I get paid? So typically, this is a complete analogy or parallel to how long do I hold inventory? This is, I've done the work, how long before I get paid? So if you ran a cash basis business, you would do the work, and we're going to return to this later, and someone would give you the money on the spot. So for example, I go to Starbucks and I buy a cup of coffee. I pay them right there. I don't sit with them and say, hey, how about I pay you in 30 days? What would the price then be then? It's a cash business. On the other hand, again, we'll turn back to this. Starbucks has been very adept at getting me to pay them in advance, right? By putting money on my phone. So this is the number of days it takes for you to get paid. And just like the inventory days, we're going to take, in this case, receivables. That'll be our numerator. We're going to divide it by revenue, and we'll multiply that quotient by the number of days in the period. And that'll say, I get paid on average in 15 days, or I get paid on average in 75 days, right? 15 days, you might say, that's great. 75 days, you say, oh, why am I making a 75-day loan to my customer? I've done the work. How come they haven't paid me yet? Who else do you loan money to for free?
Effectively a loan. And I want to break down these two components because there's various things happening here that are, within different levels of people's control, right? Between buying inventory and actually doing the work, again, difficult to improve. Conditions have been challenging, but there's tweaks and enhancements that can be made around the edges. If you're walking around your warehouse and you're like, boy, we've got a lot of skimmer baskets sitting there in the corner, it certainly draws the question. And then inside of days inventory outstanding is this period between when you do the work and you send invoices, and you have all the power in this component of days inventory outstanding, right? It is all in the hands of the business. So in as much as you're limited in the environment with inventory, there is as much power in your hands between doing the work and sending invoices.
We have a question in chat. I think it's a good one. It's probably appropriate to bring up here, but Terry asks or says, pricing is just so volatile in our market. 20% to 50% shifts in some cases. I hope you can speak to this fact and offer some advice. Thank you.
A highly volatile pricing environment, Eric?
Well, I mean, these are the challenges that we're trading off, right? Is stocking out, not having stock, no matter what the price is a problem. I suppose if you have a good sense, here's let me give you an example of this. I think, and you, the audience here, knows their business best. To the extent that you think that prices are going to be on the rise, you're going to want to take advantage of that, and you might be more than happy to hold more inventory than normal because you're stocking up at that lower price, right? If you think, by the same token, if you think prices are going to be falling, you're going to want to delay those purchases. But in both cases, you have to think about the costs of doing that, right? So if you shrink your inventory down because you expect new purchases to be much cheaper, you run the risk of not having it when you absolutely need it. And that's costly. So, you may be losing more on that sort of gamble than then that better price gives you. On the other hand, if
Yeah.
prices are going up, you might say, you know what, I know it costs me more to rent additional space, but if the price is going to go up enough, say, well, the strategic tactic for me is to temporarily rent some more space and take advantage of buying at that lower price.
Yeah, and I think, our emphasis here is start with just knowing what the number is, right? Like
Right.
start with a baseline, right? Just start
Right.
with a baseline, know what it is. If it's keeping you up at night, like, man, it's taking 45 days to move inventory and that feels like it's too long, that's a place to start. If it's, 10 days, you're running very lean, right? And
Right.
you may consider that you are running very lean and you would want to stock up. So our encouragement here is really to know your number, because there's just a lot that is outside of our control, everyone's control. I mean, Eric speaks to Fortune 100 companies that are dealing with exactly the same issues, and he has exactly the same advice. But what we want to emphasize is the parts of the cash conversion cycle where you do have control, right? Between doing the work
Right.
and sending invoices, that is all you all. So in the final component, right, collections, you may have more power than you realize. So we've talked a lot about this. We spoke to Eric quite a few times over the past few weeks, and we've put together the rules of cash flow. According to some of the conversations and discoveries that we've had just in speaking to other pool and spa professionals and drawing from other home services industries. Like Eric has spoken to folks in all kinds of home services industries, pest, HVAC, lawn, you name it. And there are some principles by which we can make improvements. So Erica and I are gonna talk here a little bit about these rules of cash flow, and it's likely a professor will chime in where he sees a chance.
Thank you. Okay, so we're going to break down here how you do have power and can control these two components we talked about: days inventory outstanding and days sales outstanding. And you've heard Flavia and Eric mention know your number, and that can feel very daunting, like, what number? Where do I start? Right? And so I want to share with you some information that you might be aware of or didn't even know was available to you in your Skimmer account. So within your Skimmer account, there is a service history report that can actually allow you to forecast your chemical needs. We know every pool is different, but every pool truly has data, and this report can share that with you. So we have a tutorial that can walk you through how to look at the data and understand it. But essentially, it's a report that you can export to Excel to estimate how much of a chemical you will need over a similar period of time. So for example, if you're looking at your total chemical use for tabs last June, the report can help you predict how many tabs you might need this June. And to take it a step further, you can manipulate the report to see pools by size compared to tabs used. So if you know going into this next season, hey, I acquired X amount of pools with X amount of gallonage, you can look back at your data from the previous year to estimate how much tabs, for example, you use then, to give you an indication of what you might need this year. So it's a really, really powerful report. Definitely leverage the data that's available to you in Skimmer. It can help you make more informed business decisions based on fact instead of gut.
And this would be a
That's
good time to be doing this, right? In a lot of parts of the country, we still haven't opened up our pools yet. But
Yeah.
those data are there, and that will help you make your purchase decisions that are going to be, you can have an impact over these next few months.
And every pool is different, and the seasons change. And in Texas, we have 4 seasons in one day. So it can be very wild to have to forecast what a pool or a spa's chemical needs will be. But again, you start with something, and over time If you are tracking your readings and dosages, you can have a pretty robust data set to work with, a nice history, and you can at least get better approximations of what a net new pool of 10,000 gallonage with 2 dogs hanging around might need over the summer. So let's move on to the second rule.
Alrighty. So the second rule of cash flow is, to the extent possible, don't take cash or checks. Now, I know that's a really loaded question, or I'm sorry, statement here, but let me sort of piece that out here for you. So it's not a secret that over the past few years, due to COVID, we have been conditioned to now do everything online and interact with one another differently. Everything is more so online than physically exchanging of hands. And what we found, both as a business and consumers, it's easier, right? Being able to make a request or make a payment or press a button or read something just by clicking online, it is a lot easier and more efficient than everyone. You see people like my grandma now going online, easily somehow figuring out how to send minion memes, right? Like, we just learned how to do life differently. And so the same goes for your business. Now, as you enter, into your customer relationships, the number one thing you want to be sure of is that you're working with confidence, meaning you're not going into a customer relationship uncertain if that payment is really going to come through. And the best way to get ahead of that is by saving a payment method on file. As soon as a customer becomes new to you, grab that information so that you know that your work is going to be paid for in full as soon as you complete it. The second important point here is customer selection is about mutual fit. Really what I'm trying to say there is, look, we understand that you might always have a subset of customers that just prefers to pay you via check. That is how they have decided that they want to do business, and it's what they feel comfortable doing, and we honor that. But there is most certainly an opportunity for you for every new customer, or at least every incremental new customer, require cashless payments, right? So honor those that are, set in their ways of checks, but move everyone else towards credit cards to make your certainty and confidence in doing work and getting paid that much higher.
That is, I promise you, those same retirees are probably like my grandmother, and I promise you, they're using credit cards to buy on QVC. Some of these folks, this is not nothing. You can't write a check to QVC. So make the ask at the very least.
Definitely.
And again, I mentioned this earlier, but it's a very tight market for pool and spa services, and a lot of pros that I meet are in this wonderful position of being able to be choosy with your customers, right? Like, somebody's becoming a pain, adios. If it's a problem pool that you don't want, adios. And I think when you're evaluating customers, method of payment could certainly become a part of the criteria, especially if you would like to grow. And Erica will speak to this last point here.
Hands down, your time as an owner, admin, service manager is insanely valuable. You pay yourself an hourly or salary rate that is much higher than that of other employees. So as a result, when you spend time processing checks or cash, you're paying the most valuable person in the company to handle that. And you should actually be spending no time allocating your hourly wage to processing checks or cash. We estimate that for every check that you process, takes about 5 minutes to do so. Now, I know as you're going through the motions, it might not feel like that much, but in reality, when you factor in the time to either drive to pick up the check or the gas that you're using to get that check, bring it back, either log into your app to deposit it or going to the bank or grocery store to deposit it, reconciling that either on Excel or an accounting system or some other software, all of that adds up. So let's figure you have 100 customers that pay you with a check. Times 5 is 8 hours spent processing checks. That's an entire workday that you could be spending, winning a sale, running a quote, getting a new customer, marketing your business, getting more revenue generating habits in place, as opposed to pushing these checks and paper that are soaking up your time and money.
Optimizing your inventory.
Yeah. Yeah.
You could use
Working on
those
the
8 hours to get a handle
Yes.
on that inventory.
Yes, working on the actually tricky stuff. Yeah, thank you,
Yeah.
Eric. That's a great point. And
Mhm.
I think, 5 minutes, no big deal, Erica. It's really not that much, not that much skin off my back. It's just 5 minutes. You're right. If you're servicing 50 customers and you're just getting started, that's maybe a price you pay, right, when you're just getting started. But a lot of you have significant ambitions of growing from, 50 to 500, 500 to 1,000. That's going to add up. It is going to become significant, and the time spent will prevent you from dealing with higher value issues of more complexity that only you probably can think about and address.
And the greater theme here is really, figuring out how to work on your business instead of in your business.
Yep.
Like, you're right, Flavia, when you're running a business, you kind of go through different stages of development. And if you truly want to scale and scale within reason, there comes a shift in how you approach your business from working on it instead of in it.
Yeah, absolutely. Absolutely. I wanted this to be the second rule of cash flow is you don't talk about cash flow and put a picture from Fight Club, but marketing told me I was not allowed to do that. So everybody just take that visual and all right. The third rule of cash flow, and we love this one. We talked about this one for a long time, making the comparison. So go for it, Erica.
Okay, so third rule of cash flow is invoice like a streaming service, which you absolutely are. Okay,
Yep.
so let's take the example of Amazon Prime. Okay, I pay them every month just to keep the darn thing on, so I can watch the shows that I want to watch, or I can order the things I want to order, right? This is the same with your customers. You should require them to save their payment method on file because you are a recurring service. You are something that they need. You are a luxury, a necessity, and a subscription, just like Amazon Prime is. So auto pay at the least should be set up for regular customers, not only because you deserve it, but also because this is what we're conditioned to do. We don't tell Netflix, hey, I'll pay you after I watch all seasons of Ozark. I pay them at the beginning, right? So
Yeah.
it's the same thing. And to take it a step further, if I'm watching Amazon Prime, if I want to order a movie, when do I pay for that? Before
Right
I
away.
even get it, right away, right? So the same comparison I want to make to when you do any work orders or repairs or maintenance outside of routine service, don't wait till the end of the month to invoice. Send that out immediately to get that revenue in your hands to start to tighten that gap that we were talking about with the day sales outstanding.
So Erica, you've worked in home services for several years, right? And you've seen all kinds of businesses. Why is Pool and Spa special and has the rights to invoice like a streaming service?
So I'll take it one step back. What drew me to Skimmer is the customer experience with pool and spa businesses is so different and special. In some cases, not all, hopefully not all, you don't know the name of your HVAC guy, right? Or your electrician. Maybe if they're a family friend, but generally speaking, I hope you don't, because that means you're seeing them way too often than you probably should. But your customers definitely know your pool tech's name, right? They ask about their kids. The pool tech knows the dog's name, right? It's just such a special relationship because they need you so often. And that's what makes you a subscription, hands down.
Yeah. And Netflix isn't taking care of a $70,000 asset and protecting the health and safety of your children. So, you know, there's a metaphor here, but it goes beyond that for sure. And this is an extension of the third rule of cash flow, Erica.
Yes. So we cannot forget to improve our collections process. But before we start to engage in strategizing, how are we going to reach out to our customers to make sure we're getting paid? You can get ahead of all of that simply by requiring a payment method on file. Again, going back to working with confidence, require that payment up front. If I get a massage, it requires my payment up front, right? Like, customers know this is how we do business. So to eliminate you having to worry about chasing down money, just start from the front by requiring that method on file for auto pay. Taking it to the next step, in your Skimmer account, you have access to your AR aging reports. Review them frequently. Which customers are notorious for not paying me? Why is this bill so outstanding over 60 days? You know, where did this customer go? Understand where your money is so you can get to it. Once you've identified some of those problem children there, send reminder emails to overdue customers. Be relentless about it. You know, if we have a subscription service that our card expires, or you know, we haven't paid, they either shut you off or keep emailing you till you're blue in the face, right? And again, to Flavia's point, you are taking care of your customers' most valuable assets, so you deserve that to get paid as soon as possible. So don't be shy about staying in front of your customers.
Yeah, I recently met, I think he's on the webinar, so he can correct me if I tell the story wrong, but a pro in California managing upwards of 500 service locations, identified 18 customers who were perennially delinquent, and finally said, we aren't going to be coming around this month until you provide a payment that I can put on file. And 17 of those 18 customers immediately provided credit cards, and you know, he churned that 18th customer. But these are the kinds of healthy boundaries, right? You don't work for free. That will enable you to get paid, generate cash for your business.
Erica, there were a couple of questions in the chat about, okay, that's all fine, but if I take credit cards, don't I incur fees for taking credit cards? And the answer also that's in the chat is, you know, that's absolutely true. But on the slide you've got up now, though, sort of points to the costs you're already paying for not accepting credit cards, right? Mm-hmm. That you're spending more time chasing people down. You're spending more time on customers who aren't paying you. You're spending more time entering things manually. Like, that's a cost as well. And, you know, you've got people and time that are embedded in that cost. The people cost is a clear salary cost, right? And so trade that off against the fees that you might have to take on with the credit cards.
And there's another question about sending invoices. You know, when's the appropriate time to surcharge for late fees? When do you finally start to press for payment? You know, I can't give you answers, right? The answer I give you is in the form of a story. If you've identified perennially delinquent customers, you can make the decision about how long you want to continue working for free, right? And is a $50 late payment equivalent to an additional stop that week, right? The time on the route, the chemicals used, the labor for that technician, is that more or less than $50? You know, I'm not sure, only you know those numbers. So there's rules, those boundaries that you need to delineate for yourself before you say, we can't continue to provide service until we have cash from you in the bank. So that's what we're gearing towards here. Erica, do I have that right?
You do. Yes.
So we prepared a couple slides here on how to make it happen, you know, with a focus on invoicing. You know, there is stuff that we can do in inventory, and Skimmer does have reporting for that, but we're going to focus on the stuff that we know we definitely can control. Here's a little on change management. Erica, do you want to speak to what we've prepared in the kit?
Yes. So I've worked with literally thousands of companies over the last 5+ years in various stages of business development. And the customers or the businesses that have been the most successful are the ones that obsess around the customer experience. So you definitely always want to maintain that line of communication with your customers. And as you think about, you know, how am I going to go cashless? How am I going to tell my customers about this? And what do I say? What do I do? How do I respond? You know, we have drawn up a template here for you, which we'll share after the webinar, to announce to your customers that you're going cashless. You know, be transparent. I have read email after email after email of pros telling me, hey, I was scared. I thought, you know, that I was going to get a lot of pushback. And customer responses are, I get it. I understand. I understand why you need to do that. It's easier. So challenge yourself to step outside of your comfort zone a little bit. We've helped you out here by writing this draft so you can start that line of communication with your customers. Perhaps you send this email out, you know, at the beginning of the month via a broadcast email in Skimmer in preparation for the change come May 1st.
And again, we will email this to you. So we're going to email the webinar, the slides, a cash conversion calculator, and a copy of this email when we are done with this webinar.
And we've had quite a few questions about credit card fees. Absolutely valid. We've talked about this a lot internally. There's, you know, every business that accepts credit card has to think about the fees. And Erica, you know, she's worked with home services businesses for many, many years now. We have some thoughts here. Go ahead, Erica.
So I'm going back to my previous statement around obsessing around the customer's experience. How can you make this transition for your customers and for you as smooth as possible? And hands down, are the most successful pros that I've worked with have baked in the credit card fees to the price of your service. And here's why. We have all experienced fee after fee. I mean, crazy fees, right? Like fees that you don't even understand what that means, you know? Like, what is a regulatory response fee? What are you responding to, right? Like we have seen so many new fees pop up, especially over the last couple of years. And it is frustrating. It's frustrating when, if you look at this example here from a food service delivery app that will remain unnamed, you know, we start with a $14 or $20 meal, a burrito and a quesadilla. And at the end of it, you're spending $40, right? So it really makes you question, is it worth a $40 burrito and quesadilla, right? The fatigue that we experience over seeing these fees is a very real thing. It just literally doesn't feel right when you're seeing all these fees add up. And your customers may feel the same way if you itemize an extra percentage or an extra service charge. So the best way to get around that, to give your customer a better experience, is as you announce that you're going cashless, perhaps you announce a small price increase as a result, and bake it in so that they have a monthly flat fee that they can rely on. It's predictable. And they are they're not wondering, well, how much is it going to be this month compared to last month? And you can entirely eliminate this, quite frankly, annoyance of the fees listed out.
And again, this goes back to thinking like a streaming service, right? I pay my streaming services a set amount every month, and I love that. And this can be part of having that baked in. And there's been, Nikki hosted the last webinar about pricing schemes and thinking about plus chems or with chems. And there's a significant number of people who really, really prefer as part of their customer experience to have a reliable flat amount every month, right? This is kind of within the same vein of that discussion. And folks will charge a either once a year chemicals fee or simply incorporate the cost of chemicals into that flat service. What's the difference here in terms of that discussion? It's not, it's all part of the customer experience is part of that pricing. So these are a few things. Go ahead.
The last comment I was going to make is that, this is happening all around us. We just might not see it so blatantly. You go to the grocery store, maybe the cost of corn is 25 cents more, and then the cost of, soup is 30 cents more. It's happening around us. We just might not see it as directly, but everyone's doing it to us. Why can't you do it to your customers?
That being said, because we do have a couple questions about how to pass along those credit card fees. This is a really actually complicated topic. And the reason being is because there are a few states and some jurisdictions that actually do not allow you to pass along surcharges to your customers. There are some requirements that need to be met if you are going to, for example, surcharge for Visa and MasterCard. Like Visa, you have to give a 30-day notice and fill out their form in order to be able to pass along a surcharge. That's not to say that there aren't people who have this feature available, and it is a feature we are heavily discussing at Skimmer. The ability, we recognize that there are people who want to pass on credit card fees to their customers, and we hear you. And I think I think it'll just have to come with the disclaimer, like it's really not up to us to make sure that you are following the rules and the laws, depending on where you live and where you service pools and all of your taxing authorities and jurisdictions. But it is something we are looking at and we'll probably end up doing sooner rather than later. Hope that answers your question.
That's right. So this is our wrap up here. Fundamentally, you owe it to yourself, clients, employees to get paid faster. Those of you with ambitions of growth, more cash means the ability to fund technicians, fund trucks, to handle the complexity of managing inventory and what continues to be a challenging environment. And we're highlighting again here your time, your valuable time and your team's time. A lot of you are in this business because you're interested in selling and in buying. This is a great measurement of operating efficiency, and we're always looking for little tweaks to build a better business, right? There's usually no silver bullet. It's these small habits that we accumulate. What am I missing?
Looks like Randy has a question here. It's a pretty good one. I try to send my invoices daily with a due upon receipt. What's an appropriate time before you add late fees? And when do you finally start to press for payment or take action?
So we alluded to this earlier, but this is why I shared the story about the customer who identified those 18 delinquent customers and said, you know what, the time spent servicing these customers is money out the door that we're not recouping. And I think, we can't tell you where that healthy boundary is. You need to think about how much time you are spending, right? Whether it is worth your time or your team's time to continue to go out and service this pool. And, late fees run something around, maybe $50, $20 per late invoice. And I think that's a low ball related to the time being spent servicing or collecting. Eric, what do you think?
Yeah, I mean, it's if there was an exact rule of thumb, we would all be doing it, right? And ultimately, it's up to what feels right to you. But I think a really valid question to ask yourself is, how long are you willing to continue to work for free? And whatever time frame feels uncomfortable or where you've reached your max, then maybe that's the point, the cutoff point of, to which you start adding a late fee or have a more serious conversation with the customer.
And I think perhaps this is the batch of customers to whom you announced that you're now going cashless, right? Like maybe everybody else is paying on time and that's not a problem. But for this subset of people, you can road test going cashless with them and say, huge news, we're changing the customer experience. It's going to be better. We'll need you to provide a credit card in order to continue servicing your pool or spa.
Right. I suspect that there's a group of people who are perennially late because they are graduate business students who are told extend your payments as long as possible. If there's no cost to paying, then don't pay. But then there's folks who, like me, for example, if you told me and this would be for any service, hey, if you don't pay me on time, it's an extra $20. You bet that's going to focus my mind. I got to pay you 5 days early to avoid the $20 fee, right? And so just the threat, and I don't mean threat sort of in all capital letters, but just like a reminder that pay on time, and here's the cost. Take your time, forget about me. I won't forget about you. I want $20 more. Most people will pay. And you won't have to deal with what's the right number. There's just a number that focuses the attention.
Yeah, absolutely. Nikki, there's a few more questions that I think we can tackle. Beverlyn asks the report with the forecast or analyze it when you see the report. So it's an export, and we have a little guide put together on how to just do some simple spreadsheet work inside of Google Sheets, which is free. And I'm happy to send that to you, Beverlyn, as a follow-up. So I'll make that happen.
Yes, I think she's asking, do you actually download it with the forecast or do you analyze it when you see it? You have the option for both. You can see the report in the window, and then you can also export the data if you want to do additional queries against that data in a database platform of your choice or a spreadsheet platform of your choice.
That's right. We have a great question from Robert. Did you answer the question of what came first, the tech in the truck or the customer? We will ask this question for a long time. One day we'll all get the answers to this question, but if you're accelerating your cash conversion cycle, you don't have to choose. Nate, is it possible to get a link of the recording of the pricing webinar? Yes, absolutely. We can do that. Let's see.
Actually, you can go to getskimmer.com/price increase toolkit. And there's a download link that'll give you the webinar recording, a calculator that lets you model how many customers you might lose or how many you can afford to lose before you're profit neutral. Really good stuff in that resource. And I will type that out for you here as well.
That's right. Well, we are right up at the top of the hour. Nikki, you want to bring us home here?
Sure. Skimmer Billing is here. Hooray. We did a little talking about Skimmer Billing, and look, it's a really powerful platform, giving the ability to give your customers, multiple ways to pay, and being able to manage it all on one platform is really what we were after, is improving the customer relationship that you have with your customers. The invoices that they receive look very similar to the service reports that many of you are already sending out. So we had one customer tell us that since she switched from a third-party billing platform to this, she's getting paid faster without having to do anything. And she suspects it's because she's sending out these invoices from her own email address that have the same branding as the service report, and people are just used to seeing them. There's a lot of powerful reporting in there already to handle a wide range of accounting needs and more to come. And if you would like to spend some time with Erica or Anessa, we can absolutely get you onboarded with that. And we'll send a link in the email with the recording of this presentation with their calendars. So if you want to book some time and ask questions and get an overview of Skimmer Billing, you can do so.
Awesome. All right. I think that's it. We're all here for you. Support at getskimmer.com. Our emails are just our first name at getskimmer.com. If you want to reach out to us and speak to us, with the grand exception of Professor Eric Hirst. Thank you so much, Eric, for joining. I hope you had fun. We had a lot of fun with
Lots
you.
of fun.
Hookem, I hope I did you proud.
You
I
did.
Thank you. Thank you. That's what I'm here for. And yeah, we're delighted to kind of bring content to you all just about building great businesses. You all know pool and spa better than we ever will, but we're trying to help in the ways that we can. And if there's topics that you want to cover that you're interested in, we are happy to work on that and just continue to modernize the pool and spa industry.
Thank you so much, everyone, for joining us, and we hope to see you on the next one. Everybody say bye.
Bye.
Bye.